This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. A cautious open ahead for Asia after the S&P 500 edges above 6,300 for the first time. Treasury yields falling as traders look for signs for earnings resilience amid tariff risks. Japanese bonds looking vulnerable to further selling as markets reopen following the historic election defeat for Prime Minister Shigeru Ishiba's LDP. And Philippine President Ferdinand Marcos Jr. expected to meet Donald Trump at the White House as he seeks to reduce a threatened 20% tariff rate. And those risks around trade really weighing on assets, especially when it comes to safe haven demand. We actually saw treasuries rising for a fourth consecutive session, with 10-year yields falling to the lowest level in more than a week. We had trade headlines being really factored into the U.S. stock markets as well. So we had a marginal rise for the S&P 500, but as I said, above 6,300 for the first time ever. So record highs. We're, of course, also really looking forward to earnings. We're watching Tesla. We're watching Alphabet this week. But it's really about what the dollar is also doing. And on the other side of that trade, what Japanese currency, the yen, is doing at the moment, because we had a little bit of more of a boost for the Japanese currency in the overnight session. This, of course, after we saw the election results for the upper house and the weekend Prime Minister Ishiba still vowing to hold on to his leadership. So perhaps a little bit more resilience when it comes to Japanese assets, but markets coming back online after public holidays. So we'll be watching what happens to Japanese stocks, especially, as I mentioned, Japanese government bonds, given, of course, we have seen the long end of yields rise to multi-year highs on fiscal concerns. For more on Japan's elections, let's bring in our Japan politics and economics reporter Sakura Murakami. Sakura, so we've been talking about Prime Minister Ishiba trying to hold on to power, but this is already what his second dismal election result. What are his colleagues within the LDP saying about his leadership, and could we see eventually a change?
So I think the main point to look out for is whether there's always going to be critics of Prime Minister Ishiba, especially after this election setback. The key point to look out for is whether these kind of voices turn into a chorus of voices, whether there's broader traction among the LDP to bring him down. We're not seeing that quite yet, but there's like a few voices coming out. Former Prime Minister Taro Aso has spoken out against him. There is a kind of LDP regional branch that is going to ask him to stand down, according to local reports. So there are voices coming through, but whether this will become a broader chorus of voices is what's key to look out for.
And the issue is that the Liberal Democratic Party really hasn't been able to resonate with a lot of the voters, given this cost of living crisis that we're experiencing here in Japan, right? So will there be some sort of reflection within the ruling LDP and its partner Komeito when it comes to some accountability over the elections?
So Prime Minister Ishiba has actually said he's not planning on changing out the personnel of his team, of his cabinet, or the executives of the LDP quite yet. But a senior LDP member was saying there's no denying that this is a huge loss, and that basically they will have to analyze the results. They'll have to look into the actual details of how they lost the election in order to consider how to take responsibility, what kind of accountability they should take. So that will probably be something that we'll be seeing in the coming days and the coming weeks as well.
Not a great time to be talking about accountability, about leadership, when you have ongoing trade negotiations with the United States, right? We understand that the top trade negotiator is in Washington. He spoke to Secretary Bessent. What do we know?
He hasn't spoken to Secretary Bessent yet, as far as I know, but he is in Washington, and he is preparing to have talks with the top trade negotiators of the US. So far, what Bessent has said is that there's no rush to seal a deal by August 1st. That kind of contradicts with what Akazawa, the top Japan negotiator, has been saying. He's saying, there's will on both sides to actually seal a trade deal by August 1. So there's a bit of a difference in the wording and the messaging there, but there'll be a lot of interest in whether there can be some sort of trade deal at that point. it'll be crucial for how long Ishiba's cabinet and Ishiba's administration can go on for as well. So that's a key point to look out for as well.
Right now, what are the main sticking points, and is there any area that they could actually compromise on?
So, I mean, the auto tariffs, I mean, it's the same issues in terms of what we've been talking about before. The auto tariffs are a big thing, the sectoral tariffs are a big issue. Prime Minister Ishiba, in his press conference yesterday, he had the same message. It's more investment than tariffs. In that sense, there is this big difference. Besant, in an interview on the US TV, he was saying the deal has to be good for Americans, and what's good for Americans, I think there's like a bit of a difference in the understanding there. So there are still a few sticking points, but we'll see how Akazawa's trip in the US plays out.
At this point, we can't but laugh, trying to understand where the negotiations are, right? I mean, there's so much secrecy, and also the sticking points don't necessarily change. But Sakura, really great to have you with us. Bloomberg Sakura Murakami there with a breakdown, of course, of the Japan elections, and not to mention the trade negotiations ongoing with the U.S. and Washington also busy negotiating with the European Union. They're racing to reach a deal before President Trump's August 1st deadline. Now, this, of course, coming at a time that if they fail, Washington is threatening 30% tariffs on most goods coming from Europe. Brussels, meanwhile, is preparing to retaliate if tariff talks fall actually into collapse. Let's bring in Bloomberg senior editor Derek Wallbank there with the latest. What do we know at this point? I mean, I was talking to Sakura, and it's really difficult to gauge if there's any compromise over sticking points and stances that have been there very strongly for every trading partner with the United States. Is there any room for compromise when it comes to the Washington-EU talks?
Well, I think the biggest question here, and one of the difficulties that has come across a lot of these trade talks, is a lot of countries don't quite know exactly where the U.S. wants to end up. They know that they want to end up somewhere better than where they are, but what's going to be enough to get the U.S. to yes, right? In the European talks, we're hearing about preparations that Europe may be ready to accept even an unbalanced deal, just if it can take some of the big maximal threats off of the table. Now, that could look like something with a universal tariff base rate higher than the 10% global minimum that's been thrown out there. Of course, Trump has threatened to hit most EU exports with a 30% tariff on August 1 if we don't have some movement by then. So there's quite a lot at stake here. The U.S. and the EU, major trading partners across a whole range of goods. And remember, that's only that sort of baseline tariff. When you get into some sectoral tariffs, the number is even higher. And so there's a lot of pressure going on here. U.S. Senior officials have said Europe was a little bit late to the game in terms of negotiations compared to some others. But again, we don't have too many deals that have been finalized at this point. We do have a lot that are sort of in train in talks as we're getting closer and closer to this August deadline. Last thing I'll say on this, though, remember, and it's always worth remembering, the August deadline is the latest in a series of moving deadlines as the big implementation has been pushed back and back and back again.
One of those talks with trading partners, Taiwan, what do we know?
Well, Taiwan says that there's going to be more trade talks this week. There's speculation that they have received a tariff letter from the United States. Again, trying to figure out what it is that the United States is going to demand there. Now, Taiwan has a very particular relationship with the U.S. in terms of its, sort of geosecurity posture. So that may play in there as well. It's a very unique economy when it comes to its U.S. relationship, as well as the U.S. and particularly the Trump administration has focused on chips. That's a place where Taiwan is a global leader, and so that has been an important focus of the sort of overall economic relationship. And we've also seen a play between the U.S. dollar and the Taiwanese dollar in terms of that relationship and where that goes. There have been a lot of, as I say, sort of large framings around this deal. But again, Taiwan, much the same as a lot of other economies, trying to figure out how you get to a deal there. Certainly, that is a place where they need to find stability on the economic front. Amid all of the sort of geopolitical tensions that are facing that particular economy.
Bloomberg senior editor Derek Wallbank there with the latest on those trade negotiations. We also have Philippine President Ferdinand Marcos Jr. in Washington, set to meet President Trump on Tuesday at the White House. That follows visits to the Pentagon and State Department focused on tariffs and security cooperation. For more, Bloomberg's Ryan Trott joins us now from D.C. Ryan, we have seen some momentum for President Marcos Jr., especially when it comes to those meetings with Secretary Bessent. What do we know at this point headed to that meeting with President Trump?
Well, that's right, Shery. President Marcos is certainly seeing some momentum during his visit. He had quite a packed day even before his meeting with President Trump scheduled at the White House on Tuesday. He held back-to-back talks with Defense Secretary Pete Hegseth and Secretary of State Marco Rubio. And in both of those encounters, both sides really emphasized the strength of the U.S.-Philippines alliance, particularly in the face of threats in the Asia-Pacific. Defense Secretary Hegseth emphasizing that the U.S.-Philippines partnership has never been stronger or more essential, and reaffirming the mutual defense treaty between the Philippines and the U.S. Rubio, meanwhile, highlighting what he called this ironclad partnership between the Philippines and the U.S. when it comes to maintaining peace and stability in the Indo-Pacific. So all of this really setting the stage for Marcos's meeting with President Trump at the White House. He has a very big task ahead of him. He has pledged to negotiate lower tariffs to bring the 20% rate that President Trump has threatened to impose on Philippine products, which Marcos has called very severe. He's under some sort of pressure, of course, because some of the Philippines' neighbors in Southeast Asia, notably Indonesia and Vietnam, had managed to negotiate lower tariffs as part of their trade agreements with the U.S.
A lot of pressure domestically as well. I mean, he did suffer a setback in the midterm elections. So what sort of leverage does President Marcos have in going into these trade negotiations?
Well, he could play up that security alliance between Manila and Washington, which has become stronger under his administration. So he's really restored that security relationship after coming under strain under his predecessor, Rodrigo Duterte, who has favored closer ties with China. So Marcos has allowed expanded U.S. access to U.S. bases, military bases in the Philippines. He's hosted thousands of American troops for military exercises and even allowed the deployment of a U.S. missile system. So there's that security aspect. But when it comes to actual trade, a Philippine trade delegation that has come to Washington for rounds of talks has pledged to increase purchases of U.S. farm products, including soybeans and frozen meat. So, but whether that would be enough or all of that would be enough to sway President Trump, of course, remains to be seen. He's known to be unpredictable. And just because the Philippines is a long-standing U.S. ally in Asia doesn't mean that it will be getting favorable trade terms. We've seen how President Trump has threatened higher duties on products from South Korea and Japan, despite those countries being close allies as well in Asia. Shery.
Yeah, Bloomberg's Ryan Trott there with the latest on those trade negotiations. Thank you for that update. Coming up on the Asia trade, more on Japan's shifting political landscape with a former lawmaker. Plus, we talk markets with Mizuho Securities Asia and a closer look at the challenges for Australia's re-elected government as Parliament resumes. We have much more ahead. This is Bloomberg. Japan coming back from holidays after the upper house elections over the weekend. Prime Minister Ishiba losing that majority in the upper house elections. Take a look at the picture right now. Nikkei futures not doing much. We have seen a little bit of strength on the Japanese yen, but we're under pressure again. You see Sydney futures to the upside of 0.1%, while U.S. futures are holding steady. We are around already at record highs with the S&P 500 above that 6,300 for the first time ever. For more, let's bring in executive editor for Asia Markets, Paul Dobson. And Paul, should I start you off with Japan? Of course, the market's coming back from a public holiday. I mean, we were concerned about a potential triple dip where you have bonds, yen, stocks all falling. What's the picture looking like right now?
Yeah, good morning, Shery. Well, a little bit brighter than that prognosis, maybe. We saw the yen rally about 1% yesterday, so quite a good move by the end of the day. It feels like there was a little bit of relief among investors about the idea that Ishiba at least is going to try and stay in power, trying to get the negotiations done over a trade deal with the US. And let's see what he does over the budget negotiations. That's probably what it's going to really come down to. How much horse trading there is, how much of a trade-off, how much he has to relent on measures that the opposition parties would like to see, like a reduction in the sales tax to try to boost growth, because the spending of the Japanese government is the thing that bond investors are paying a lot of attention to, and that's been causing a lot of volatility across the rest of markets as well. But so far, the signs are that maybe, just maybe, the market can find a little bit of stability here.
At least the earnings season in the U.S. also seems to be shaping up pretty resiliently at the moment. We do have some big tech names also reporting, including Alphabet. How's that going to filter through in the Asian session?
Yeah, well, it's going to be massively important to watch all of those earnings all through this week. As you said, we got off to a pretty bright start. The market doesn't seem to be rewarding all that much good earnings at the moment, though. This is something that we need to watch a little bit more, just how much is already priced in terms of that optimism, because the earnings beats don't seem to be producing a particularly big response in stock markets. Have a look at the US banks, for example, last week, whereas earnings misses seem to be translating into pretty nasty negative reactions in markets as well. So that tells you sort of where the pricing is. That being said, Asian tech has been having a pretty decent time of it recently. So TSMC, which had really good looking prognosis, reaching a record high in recent sessions. Its valuation stretching over $1 trillion, becoming just about the 10th or 11th biggest company in the world as well. So tech still looking like a spot that's in favor at the moment. If those US earnings deliver on the, admittedly very lofty expectations, then maybe that translates into further gains over here in the Asia markets as well.
We had already the dollar falling in the overnight session. Of course, we continue to see that downtrend. How does that bode for Asian FX, especially when we're also trying to factor in all of the uncertainty over the trade headlines that we keep getting from different parts of the world?
Yeah, those trade headlines are just going to keep on rolling. We're going to start ratcheting up to that August 1st deadline, which is going to put a little bit more tension back into the market, I think, as we go through this week. But the long-term trend is that sort of dollar slowly and steadily easing. We had a little bit of a let-up in that over the past couple of weeks. Now back onto the downward path, and so maybe that gives Asian currencies another little spring in the step. Pay particular attention, as always, to the Chinese yuan, what they're doing with the fix, where they're allowing the yen to slowly appreciate against the US dollar as well. See if that can continue, because Asian FX is taking its cue a lot from what the Chinese authorities are doing there at the moment.
Bloomberg's Paul Dobson there with what to look ahead in the markets. Great to have you with us. We have more ahead on the Asia trade. This is Bloomberg. Time to look at some market analyst calls ahead of the Asia trading day. Morgan Stanley strategists thinking that the recent rebound in the U.S. dollar creates a good entry point for investors to add emerging market exposure to their portfolio. They also recommend that investors bet on declines in the U.S. dollar against select emerging market currencies such as the Chilean peso, Turkish lira, Egyptian pound, and also the South Korean won. Meanwhile, research affiliate chairman Rob Arnott sees bargains in non-U.S. stocks, especially in emerging markets. He also thinks that the 10-year growth outlook for small-cap stocks is better than for large-cap stocks.
The screaming bargains are in non-U.S. stocks relative to U.S., non-U.S. value in particular, emerging markets value in particular, and small-cap value versus large-cap growth. Our work on developing capital markets expectations shows a 10-year outlook for small-cap value of 8% per annum better than large-cap growth.
Arnott is also backing President Trump's landmark tax and spending bill. He told us that the legislation will ultimately have big benefits for corporate America.
The stimulus doesn't stimulate the economy. It does stimulate earnings, and it does stimulate, think of it as a fire hydrant open on a city street. The people who in the homes don't get any of the water. The people with buckets near the fire hydrants get all the water. Well, who's the people with the fire hydrants? Financial services and corporate America on the profit side.
So who benefits the most? Because you look at Verizon directly citing favorable tax reform as they increase their guidance. Are there places you're looking to see where that one big beautiful bill is going to be impacting corporate America the most?
We haven't drilled down to that. I wish I had a good answer for you on that. Broadly, it'll impact corporate earnings in a big, beautiful way, and that can keep bubbles going longer. We saw that through the whole period of monetary ease with zero interest rates, where the zero interest rates sure didn't stimulate economic growth. Economic growth was kind of sluggish that decade, but it sure stimulated capital markets. And it's not a healthy form of incremental growth if it's rewarding share prices and not the broad public. So that's the big issue. That's the big divide.
Well, let's talk about bubbles a little bit more, because I feel like we're all kind of familiar with how bubbles form. You get some stimulus stimulating the capital markets. You get investors falling in love with a theme such as AI. But how do bubbles pop? What is the typical catalyst when you look across history?
Firstly, catalysts are, by definition, a surprise.
That's true. I was hoping you could just tell us.
It's still a fun parlor game to try to guess what they can be. Second, thought experiment. What were the catalysts that caused the dot-com bubble to burst in March of 2000? I have yet to hear a really powerful argument for what it was. Maybe stock options coming up for expiration for redemption of shares, that sort of thing. But realistically, the catalyst can be almost anything.
Research affiliate chairman Rob Arnott speaking with Bloomberg's Shonali Basak and Katie Greifeld. Take a look at how currencies are trading at the moment. We have seen a little bit of strength in the Japanese yen, some of those bullish trends returning. But still, right now, we're under a little bit of pressure against the U.S. dollar, despite the fact that the dollar fell with Treasury yields in the overnight session versus all of its developed world peers. You are seeing the euro also holding steady. Of course, we continue to watch the trade negotiations between the European Union and U.S. negotiators as well. This is Bloomberg.
We, the Liberal Democratic Party, received a very severe judgment by the people in yesterday's upper house election. As the head of the Liberal Democratic Party, I apologize deeply for the upper house election result.
Japanese Prime Minister Shigeru Ishiba on the election results, and despite that apology, he's vowing to stay on as Prime Minister of Japan, and that perhaps giving some sense of stability to the markets. Take a look at how we're setting up for the market opens. We had a public holiday in Japan, so we only saw the reaction in the Japanese yen. Under a little bit of pressure right now, but still after gaining a little bit of ground after the upper house election results. We continue to watch JGBs as well, because risks are to perhaps further selling when trading resumes, given, of course, the concerns about the fiscal picture here in the country. For more, let's bring in Bloomberg reporter Alice French. And Alice, coming into this election, we're thinking perhaps we could see this triple dip. Are we going to see that at the open in a few minutes?
I mean, look, it's difficult to predict, right? But if we look at stock futures, it's looking pretty muted. I think, there was quite a lot of selling, a lot of caution coming into this election last week, and so we may even see a little bit of buying back. But in terms of the near-term outlook, it is looking like that triple dip could still be on the cards. We know that fiscal policy in particular is a big area of caution for investors. Obviously, Ishiba having lost that majority in the upper house means that he may have to make concessions to those opposition parties. We know some of them are pushing for tax cuts. That's going to put pressure on government spending. How will he be able to afford this, big increase in defense spending that he's pushing for? For example, obviously bonds have been under pressure worldwide because of rising government spending. So I think the focus is really going to be on JGBs this morning. Like I say, we may see a little bit of buying back that might support them kind of today and this week, but I think the kind of midterm outlook is still for more selling there.
Yeah, I mean, we have seen the finance ministry try to sort of stabilize the JGB markets. We have seen the Bank of Japan also pull back on its reduction of purchases. So what should we be watching out for in terms of levels when it comes to JGBs, and what's sort of the timeline here?
Yeah, I mean, I think it's going to be interesting, right? Particularly in the super long area of the bond market. I think it could be particularly pressured. We know that there's a lot of foreign buying there. Foreign investors are particularly sensitive to these kind of fiscal issues, and so I think in terms of the timeline, I mean, we know that we have a BOJ policy decision coming up at the end of this month. It's only days away, so I think that's going to be the next big kind of the next big event for the bond market, and that's what investors will be looking to. But I think in the short term, definitely there'll be a lot of worries, and that could play out also in stocks and on the yen too.
What's been interesting with the yen is despite yields rising, we have actually seen that pressure. So could we see that renewed selling?
I think so. I mean, like you mentioned, we actually saw some strengthening in the yen yesterday after the election. I think that's perhaps more of a kind of safe haven demand, some risk-off trading there because of this uncertainty around politics. People that I've been speaking to, yesterday and today are saying that probably that strengthening is not going to continue. We will see some weakening pressure. Of course, this is all also very tied up with what happens with trade, right? We only have 10 or so days left until that August 1st deadline for that trade deal with the US. And I think if that doesn't go to plan, and if Japan can't get a favorable outcome, that could also definitely pressure the yen going forwards.
Bloomberg's Alice French here with an outlook of the Japanese markets as we head into the open in less than half an hour. Let's bring in Mieko Nakabayashi, professor at Waseda University. She previously served as a member of Japan's House of Representatives. Mieko, always good to have you with us. I mean, Prime Minister Ishiba is vowing to stay on, but for how long will he be able to cling on to power when we've seen the last three LDP leaders that lost the majority in the upper house actually having to eventually step down?
Exactly. That's why people are pretty worried about the stableness of the government that Mr. Ishiba is leading. This is a very difficult moment because this is actually for the LDP and Komeito coalition, first real defeat in both the upper and lower houses.
It's interesting because we don't usually pay that much attention to the upper house. It's usually the more powerful lower house that we're watching. Why was this election so consequential?
You're right. That's a good point. Usually, the lower house is the one to determine which party is taking over the government. The upper house is not the one to determine such things, and having 6-year term, which should be pretty stable over there at the upper house. However, this time, Mr. Ishiba has already lost the lower house last year's election. And the upper house was almost considered to be determining the government and who is controlling Japanese policies in the coming, future, until the LDP would decide whether to keep Mr. Ishiba or replace someone with someone so that maybe the government can be controlled better. However, it is very difficult to lose both houses because all those opposition parties are also split. And small parties almost gained 5% of proportional voting. That means several parties are pretty powerful now. And Mr. Ishiba has to coordinate with them because he had already lost the lower house, and this week or last week he lost the upper house also. This is unprecedented.
Exactly, especially given that smaller parties like the right-wing Sangseito actually won so many seats. What is that telling you about these larger, more established political parties and how closely in touch they are with actual Japanese voters?
Well, usually new parties wouldn't get this much seats. However, they are actually pretty well organized. And Mr. Kamiya is the leader of Sansei-to or Sansei Party. He is charismatic. He learned a lot from Mr. Trump's style, and he was able to collect so much votes from younger generations. Therefore, many Japanese are fascinated eventually Japan started to have right-wing party to be so powerful. However, we have to be very careful to watch this party because Mr. Kamiya is an interesting figure. He has been working to build this party for almost 10 years. And when he was asked what kind of legislation he's going to propose, because he claimed that foreigners are the problems and Japan first is the party's policy. It was very interesting to hear his reply because he said, maybe we should reform the international internship program that is inviting lots of foreigners to Japan, by the way. And it was nothing new. All the parties have already discussed about it, and his reply was sort of disappointingly normal. Therefore, we have to see, we have to watch that party, how it actually turns to.
Right, so we have to see all of the individual smaller parties really dealing with the government on an issue-by-issue basis, given how everything is so fragmented, right? How does that bode for, say, big issues like a sales tax cut? Because some of the opposition parties that were campaigning on that actually did pretty well. Are we going to eventually see that happen?
Exactly. Besides a Sansei Party or Sansei-to, Democratic Party for the People, DPP, is the one claiming that Japan should reduce the sales tax, at least for a while, and a Constitutional Democratic Party also claimed that they should reduce the sales tax. And there are other tax issues to be cut. I'm sure they are going to claim that because the LDP and Komeito coalition didn't really realize what they promised in the past elections, such as the lower house election last year. Therefore, they're pretty energized to claim the tax cutting. This is the reason that Japanese yen and market are a little bit shaky.
Right, and that really plays with the households here in Japan. Mieko Nakabayashi, good to have you with us, professor at Waseda University. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how commodities are trading. Oil under a little bit of pressure, of course, as we continue to see the tensions around trade. We are headed towards the August 1st deadline for those blanket tariffs from the United States to take place. Oil, little change in the overnight session, and you can see the downside in the early Asian morning. We are also watching copper and iron ore. We have seen new highs for copper, rising to the highest in nearly 2 weeks. We are seeing signs of rising demand for China. A lot to do, of course, with those 50% tariffs on copper imports that sent shipments of American scrap metals to China plunging to a 21-year low. So we're seeing local smelters bracing for that potential shortage of scrap metal. Iron ore also at a 4-month high. This, of course, having to do with that mega dam project that China is planning to build. It's actually begun the world's largest hydropower project in Tibet. It's estimated to cost 4 times more than the Three Gorges Dam, providing an economic jolt to the construction sector. Let's bring in our China correspondent Mimi Lo in Hong Kong. And Mimi, the dam is expected to provide a new source of clean energy. Tell us how significant this construction is, not only because of the project itself, but also for the Beijing leadership.
Yes, Premier Li Qiang broke ground on Saturday, and he called it the project of the century. And it's really a project of epic proportions, because I remember when the Three Gorges Dam was built, it was already something of unthinkable proportions at the time. And now this is 3 times as large, costing as much as 4 times more. It's a project that kills multiple birds with one stone, because, as you said, number one, it helps China to reach its zero carbon emission goals by 2060. It's expected to generate 70 gigawatt of electricity, which is greater than the total power generation of Poland alone. And number two, it's also an economic jolt. Think about the sectors like construction, like steel, iron ore. We already see these big moves in the markets yesterday, especially in some of these companies seeing limited up moves of 10% or more. And Citigroup expecting that this could boost economic growth by up to 0.1% in the first year of construction alone. But of course, there is also immense cost involved. There is the environmental cost, because this is a river that passes through Tibet at a very beautiful canyon. It's a U-shaped bend, but engineers will have to straighten part of that river and divert the water through tunnels. You can see the picture that we'll show you. And environmentalist groups are concerned about the tectonic shifts, potential landslide. And then, of course, there is the geopolitical tension with India and Bangladesh, given that this river flows through those countries downstream as well. There is concern about water security from those countries that have registered their complaints with Beijing, but China says that there will not be any implications downstream, that it is taking measures to protect the environment, and it will continue to maintain communication with these countries and take steps to mitigate the consequences.
Yeah, so many issues to consider with these mega projects. But when it comes to the economic jolt that you mentioned earlier, how needed is this for China at a time when we're also hearing from Goldman Sachs really warning about wage growth in the country?
Yes, Goldman Sachs has its own indicator of wage growth, its own tracker showing that wage growth is at its weakest or slowest on record outside the pandemic years. And in the second quarter, it was 3.9% growth in wages on year, which is 1 percentage point lower than what the official statistics show. And many analysts believe that the official statistics may underestimate the problem. And so Goldman Sachs had incorporated other numbers such as the employment sub-gauges of the PMI surveys, as well as unemployment insurance claims. Here you can see the official wage growth showing that the wage growth in recent years really still far below the pre-pandemic levels. And the implication of this, of course, is that consumption recovery could be affected, even as we see pretty robust numbers in recent months thanks to the government subsidies. Longer term, there is a concern there, and it also puts a constraint on the government's effort to try to rein in that price competition among industry players right now, because a consolidation of industrial capacity is going to likely lead to job losses, and given the slack labor market, that is going to be a concern for the Chinese government as well. So they might have to take a gradual pace in trying to rein in that excess capacity.
Bloomberg China correspondent Mimi Lo there with the latest on the Chinese economy. These are some of the other stories that we're following as well. 28 countries, including the UK, Japan, Australia, Canada, and many European nations have issued a joint statement saying Israel's war in Gaza must end now. The nation's foreign ministers say the suffering of Gaza civilians has reached new depths, condemning the recent killing of more than 800 Palestinians who were seeking aid. Israel's foreign ministry calls the criticism disconnected from reality. The Trump administration says it's deploying more immigration agents to New York after a migrant allegedly shot a federal officer. Homeland Security Secretary Kristi Noem blames the city's sanctuary policies for releasing repeat offenders. New York officials say they follow state law and are targeting dangerous individuals in coordination with federal partners. A new report says President Trump's recently passed tax and spending law will add $3.4 trillion to U.S. deficits over a decade. The latest estimate from the nonpartisan Congressional Budget Office also warns millions will lose health care coverage. The analysis doesn't factor dynamic effects like the bill's potential impact on growth or interest rates. We have more ahead on the Asia trade. This is Bloomberg. Welcome back. Hayman Capital CIO Kyle Bass says he's wary of the outlook for major Asian currencies, including both the yen and the Hong Kong dollar. He told us why Japan's currency is particularly concerning.
Japanese sovereign debt to GDP is north of 260%. It's kind of the world's most interesting debt laboratory. And so when you get a scenario like you had with COVID, where you have to remember the whole world is priced in dollars. And so when the U.S. Fed and the U.S. administration decides to print and spend as much as we did, remember we put 40% more M2 into the system between 2020 and 2023. And what did we get? We got about a 40 or 50% inflation of almost everything, and I'll caveat that there are a few things that didn't move 40 or 50% higher in expense, but let's say dwellings and consumer goods and things that people have to buy every day or pay for rent did. So what happened in Japan is the yen went from roughly 100 to 160, and now it's sitting around, what, 145, 147. So when you think about the yen is just moving in the amount of purchasing power it has in dollars. It's really that simple. And so they're in a really bad situation from a debt perspective. They've got a population decline. They are a very important trading partner of the United States and one of the stalwarts of ours in Asia. So I think we're going to do all we can to trade and help the Japanese going forward. But I think they're in a precarious position, i.e. they either have to let their currency go or their bond market go, and they'll never let their bond market go. So I would beware of the yen into the future.
All right, well, we'll keep an eye on that one. I mentioned the Hong Kong dollar. You've bet against the Hong Kong dollar in the past, which of course is pegged to the U.S. currency, and it has experienced some swings because of President Trump's tariffs and the impact there. The HKMA intervening, spending a lot of money to support that currency peg. As Romain was saying, every so often people wonder whether it's time for the Hong Kong dollar to be repegged to a basket of currencies or repegged maybe to the Chinese currency. Are we at one of those times right now?
Yeah, I think, again, when you think about this peg, it's been around since 1983. Back then, the reason the peg was put into place is there was a massive run on the Hong Kong dollar. If you remember, there were rumors back in 1981-82 about the British handing Hong Kong back to the Chinese. And when those rumors got out, money started fleeing Hong Kong and Asia kind of writ large. And so the Hong Kong dollar depreciated 50% versus the dollar in a basket of world currencies. And we, the United States and the United States dollar, provides the stability to Hong Kong and therefore China in their currency regime. So when you think about that peg, it used to be that as Hong Kong's economy went, so did those of the United States and the West. Now Hong Kong's economy is more inextricably linked with China's, and there's a divergence in economic activity. China has had its worst financial crisis in maybe its modern day history in the last 2 2 or 3 years. Its 10-year bonds at 1.5%. Its overnight rates are roughly 1.5%. So China's having a really difficult economic period internally. And so those economies no longer move with the same synchronicity that was required. So look at Hong Kong's overnight rates today. The overnight rate is still close to 0. U.S. overnight rates are 4.3. One-year rates in Hong Kong are not around 1%. Ours are still around 4%. And if you can interchangeably own the HKD or USD, you'd be crazy not to convert it to USDs, right? You may earn 3 to 4% more. That's why you're seeing the weakness in the Hong Kong dollar. The question is, can Hong Kong afford to move its rates higher? Because the majority of Hong Kong mortgages are floating rate mortgages tied to short rates. So Hong Kong's in a really bad position right now. And also the geopolitical risks are there.
Hayman Capital CIO Kyle Bass speaking with Bloomberg's Scarlett Fu there. And the latest from the corporate front as well, Citigroup saying it's asking its incoming investment banking analysts to disclose whether they've already accepted job offers elsewhere. The bank says the move is meant to foster a fair and transparent environment as private equity firms increasingly recruit junior bankers early. Goldman Sachs and Morgan Stanley have recently introduced similar policies. Officials and cybersecurity researchers say that hackers have exploited a flaw in Microsoft's SharePoint software, breaching governments, businesses, and organizations worldwide. Microsoft released a patch over the weekend, but warns more fixes are coming as attackers continue targeting SharePoint clients. The vulnerabilities were first identified in May by researchers at a Berlin cybersecurity conference. Crypto betting platform Polymarket has struck a deal to return to the U.S. market just weeks after prosecutors shut down an investigation of the company. In a statement, the company says it's re-entering the U.S. by acquiring derivatives exchange QCX. In a $112 million deal, Polymarket rose to prominence during the 2024 U.S. election, allowing users to bet on political outcomes. Take a look at how cryptocurrencies are trading at the moment after a week of losses. But of course, we're headed to the Japan market opens after a public holiday and factoring in that upper house election loss for Prime Minister Ishiba. The open in Tokyo, Sydney, and Seoul are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we factor in all of the latest trade headlines. Of course, Paul, we have the U.S. negotiating with several trading partners, including the European Union, Japan, and of course, South Korea and the likes. But here in Japan, it'll also be about the reaction in the markets to the upper house election over the weekend.
Absolutely. Well, not a surprising result, but not the result that Shigeru Ishiba was hoping for, certainly. I guess the question now turns to, well, can he hang on? And if he does hang on, for how long, Shery?
And in order to hang on, will he give up concessions like sales tax cuts, for example? And what that will mean for the fiscal picture here in Japan is a key question for investors. And of course, that was the picture going into the upper house elections. And we were expecting that triple dip of weakness in the Japanese yen, government bonds, not to mention the stock market as well. Perhaps not as significant for this market open because we saw a little bit more stability in the Japanese yen right after the upper house elections. In fact, we saw some strength right now holding at that 147 level against the U.S. dollar, and stocks at the moment gaining about 0.2%. Of course, we'll be watching the policy-sensitive sectors like utilities, construction, banking, and so forth. But it will really be about the JGB space, the 10-year yield holding at that 154 level. But could we see more pressure on JGBs given the fiscal picture? As I mentioned, those potential concessions when it comes to fiscal spending. Of course, already the global picture has been one of concern, and we have seen the ultra-long end for Japanese yields really rising to 2-decade highs. Take a look at how South Korea is also coming online, because we have now word from local media in South Korea that officials there with U.S. officials will hold another meeting by this week on July 25th, according to SBS television. Take a look at the Kospi, not doing much at the moment, as we're seeing the Korean won also holding steady at that 1382 level as we continue to watch those trade negotiations, Paul.
We just opened for trade here in Australia as well, seeing a little bit of modest positivity here on the ASX. Watching some of the big mining companies today as well. Fortescue Metals has just started trading. This is a pure play iron ore company. Biggest market, China, up by more than 1%. And I mentioned that in the context that, well, China is believed to be planning a new dam, triple the size of the Three Gorges Dam. That's obviously bullish for commodities. Copper prices are higher as well, hitting the most in about 2 years. Take a look at a few other assets that we're tracking also. The Aussie dollar might face a little bit of pressure. We will get the minutes from the last Reserve Bank meeting later on today, and that was, of course, when the RBA surprised many watchers, staying on hold. Some easing had been expected, but bets now are increasing on some more aggressive easing to come. Got yields on US Treasuries. Not a great deal of change there. We did see some of those longer dated notes slipping a little bit in the US session. All right, well, joining us now is Sean Darby, Managing Director at Mizuho Securities Asia. And Sean, I want to start you off, if I can, with some of the reaction to what we're seeing in Japan. I mean, we're back trading for the first time since the election, public holiday yesterday. But how do you approach Japanese assets at the moment? You know, we've got uncharacteristic inflation, tariff uncertainty, and now political uncertainty as well. What's your approach here?
Well, I think for the whole of North Asia, they're still under this cloud of not having yet agreed a trade deal, so it's still very difficult really to sort of see any sort of bright lining for these equity markets. I think for Japan in particular, I think Ishiba-san had wanted to get a trade deal. With that, he could have gone to the public and recognised the fact that a lot of the uncertainty had been removed, and then you would have been able to see the central bank go back and start to raise rates to quell some of the inflation. So unfortunately, they're still in this sort of vicious cycle in which there's no trade deal, inflation continues to rise, and that's making the population unhappy. So I guess in the short term, he's going to have to make perhaps some concessions in terms of tax relief to, again, provide some stimulus to the economy, and then hope that there's a trade deal in the background that can be signed for him to perhaps go back and seek a second election. So he's still in that spiral in which the trade deal really is the core issue in terms of being able to go back to the public and hopefully get a better election outcome than perhaps the one that's just happened.
Well, Bloomberg, as you may have heard, has been speaking to Kyle Bass of Hayman Capital. He's long had views on Japan. He's had some views on the yen as well. Let's take a quick listen.
Japanese sovereign debt to GDP is north of 260%. It's kind of the world's most interesting debt laboratory. I think they're in a precarious position, i.e. they either have to let their currency go or their bond market go, and they'll never let their bond market go. So I would beware of the yen into the future.
So, Sean, with that in mind, what's your view on where the floor could be for the yen?
Well, I'm not necessarily the currency expert for Mizuho, but I would slightly take issue with Mr. Bass's comments on the instability of Japan's bond market. I think you have to look at the other side of the balance sheet, and Japan has been running record current account surpluses. Its savings surpluses are huge, and there's no difficulty in Japan being able to finance its debt. So that, I think, is not an issue for Japan, nor necessarily the yen. Yes, Japan's got a large debt to GDP ratio, but it's all that debt is in yen, and they're running very, very large savings surpluses. I think at the end of last year, the current account was the largest in history for Japan as well as for China. So I think in the short term, I think markets are probably not going to be that concerned with the level of debt. I think what really matters in Japan at the moment is getting the inflation normalized and getting essentially the central bank being able to start to use monetary policy again to quell some of that inflation. So I'm less concerned than Mr. Bass on the outcome for the yen and for Japan's debt markets.
I think we have really been focusing on the debt markets just because of the performance of previous auctions when it comes to the ultra long here in Japan, right? I mean, we have seen the BOJ perhaps pulling back some of those reductions of purchases that we've seen. The finance ministry has been talking about the auctions as well. When it comes to these yields that continue to surge in the long end to 2-decade highs, at what point does it become a problem for the stock market?
That's a good question. I think at the moment it has been less of an issue for the Japanese equity market, principally because real interest rates, both at the short end and to some extent at the long end, if you look at inflation swaps, have been negative. So with real rates negative, you tend to find that equity markets tend to be well supported. So the move in yields has not come about with such a vicious force that it's created a downward spiral in asset markets, as you would have seen perhaps in Europe in 2011 or in the UK bond markets a couple of years ago. So far, you haven't had that spillover effect harming Japanese equities. You also have to bear in mind that there's a lot of companies or a lot of financials in Japan that tend to benefit from a steepening of the yield curve. And again, Japan has quite a large weighting of banks in its indices, which means that, again, it's not as adversely hit by a higher long-term rate. So provided real rates remain relatively negative where we are at the moment, I'm not so sure we're going to get the very bad spillover effects harming Japanese equities or North Asian equities in the same manner.
Also, I guess, Sean, is a period of time right now when we're seeing the stock markets look for any excuse to continue its trajectory upwards, right? We do have earnings season in the mix. We are going to get the likes of tech giants reporting Alphabet this week as well. When it comes to that semiconductor cycle, when it comes to that tech cycle here in Asia, how durable has it been, and can it continue to be this resilient?
That's a really good question. I think the way I would look at it at the moment is that, ironically, the OBA, or One Big Beautiful Bill Act that Mr. Trump got signed off a week or so ago, actually encouraged front-loading of investment, particularly into data centers and also into tech equipment. He's allowed purchasers of equipment to write that off within 1 year or depreciate it by 100%. That's an enormous incentive to go out and spend on tech equipment, everything from servers all the way down to PC peripherals. So ironically, for Asia, we're going to get an added boost from those measures coming through. And as I said, I think it's going to be still relatively good news for the tech industry in Taiwan and Korea. And certainly when we've looked at the PMI for Taiwan, for electronics, it's remained in an expansion phase for the best part of this year, and as well as backlog of orders as well have also remained firm. So I don't think we're going to see any bad earnings numbers necessarily from the US tech or from Asia tech for the next quarter or so.
Sean, I just want to get your views on what we're seeing in the commodity space as well. We've got iron ore right now, the most active traded contract in Singapore. Copper's hovering around a 2-year high, and silver's been the quiet bolter of the year as well. How sustainable are some of these gains?
That's also a good question. I think the commodity equity class has been very under-owned. It's been a very big underperformer after the big boost from post-COVID. From my perspective, the whole electricity and grid electrification theme is going to underwrite the copper and aluminium metal prices, and certainly the evidence that we're seeing from the build-out of the dam in Tibet, as well as also the infrastructure that's going on in the United States for nuclear power, is going to be very, very bullish for those copper and aluminium metal prices. But overall, if you look at the commodity indices, they should be actually doing a lot better if it were not for the weakness in oil prices. Food prices remain very elevated compared to where we've been in history. And as I've alluded to in the metal markets, the fiscal stimulus that's come through from the United States and in China over the last 12 months is going to be very bullish for fixed asset investment. So I would expect with the weak dollar and fiscal expenditure that metal prices can hold their gains and probably do pretty well for the rest of the year.
Yeah, the Bloomberg Commodity Index up for 3 consecutive weeks already. Sean Darby, always good to have you with us, Managing Director at Mizuho Securities Asia. We have more ahead on the Asia trade. This is Bloomberg.
昨日行われました
We, the Liberal Democratic Party, received a very severe judgment by the people in yesterday's upper house election. As the head of the Liberal Democratic Party, I apologize deeply for the upper house election result.
Japanese Prime Minister Shigeru Ishiba speaking yesterday about his party's loss of its upper house majority, still vowing to stay on as leader. So we are seeing a little bit more stability, especially when it comes to the Japanese yen, which has rebounded in the overnight session, holding steady at the moment, weakening a little bit now as the day progresses. 147 is your level, but of course we continue to watch JGBs and vulnerability to further selling. We are now seeing the 10-year yield rising at the moment as, of course, traders are pricing in potentially concessions when it comes to fiscal spending. For more, Japan and Korea economy and government editor Paul Jackson joins us now after the upper house election and that loss by Prime Minister Ishiba. But I guess the question is, who wants that job at this point?
Well, I think that is a key point, because if you look at it, you've got an administration that doesn't have a majority in either house. So in terms of like moving forward with legislation, you're in kind of gridlock city, right? So who's going to be able to step in, with the superhero cape and transform things? Well, it's a very difficult scenario they're in. So who actually wants that job? Maybe it's a waiting game. You let Ishiba stumble on and then wait for the perfect moment later on. But let's be very clear about this. Ishiba is still on very shaky ground. Although he's talking about continuing, he's going to remain as Prime Minister. He doesn't have that. He's not on solid territory yet.
Are the U.S. trade talks his leverage to stay on?
I think they definitely are. I mean, I think he's played that as a trump card. No pun intended there. It means that he can say, look, in the national interests of Japan, does it make sense to get rid of me, get a new premier in now, when we're at this critical moment that is so important for Japan? And remember, these tariffs, I mean, we've got 25% on cars. That accounts for about more than 80% of the trade deficit with the US. So it's going to be very difficult for Donald Trump to give any ground on that. But then you've got 25% on everything else. So we really are going to need to see some kind of concessions in order for Ishiba to sell it as a deal that's worked for Japan. If he can achieve that, that is, of course, still a big question mark.
Paul, to what degree was that election result indicative of maybe a deeper problem with not just the LDP but with both major parties? Are we seeing a fracturing of the political landscape in Japan as we're seeing in some other democracies?
Well, I think it's interesting. If you look at the voting figures, we had a much higher turnout, people getting a bit more involved, younger generation voting more. I mean, older voters have always been out in force, and of course they tend to vote for the traditional parties. So are we starting to see some kind of disconnect between younger people who are saying, hey, what is this inflation? We didn't even want this inflation. Those traditional policymakers wanted this inflation. Well, we don't want it. We want more take-home pay. And then, we've seen a kind of fracturing in two different of the smaller populist parties. The Democratic Party for the People, they've been focusing on this increasing take-home pay. That's resonating with a lot of people of working age, younger voters. But we're also seeing a fracturing on the right-wing side, people reacting to the influx of foreigners, both tourists and people living in heavy manufacturing areas, and also foreigners taking over like ski resorts and stuff. And we've seen Sanseito winning members in some of these highly localized areas.
All right, Bloomberg's Paul Jackson there on the Japan election. Well, US and EU trade negotiators are racing to reach a deal before President Trump's August 1st deadline. If they fail, Washington's threatening a 30% tariff on most European goods. Brussels, meanwhile, is preparing to retaliate if tariff talks collapse. Let's get to Bloomberg senior editor Derek Waldbank now. So, Derek, a lot at stake here. What are the key sticking points, and can they be resolved before the 1st of August, which is, just over a week away now?
Well, Paul, you neatly outlined the stakes, and they are very simple, but very, very consequential. The threat is 30%. That's not including sectoral tariffs, of which there have been a few implemented and a few more threatened on key industries, of which Europe has a lot, right? This is a major trading relationship. This is one with tons at stake across every possible sector, right? So its consequences cannot really be understated here. The goal is that there is, this 10% universal levy. Maybe it goes up a little bit from there, but getting down to that as much as you possibly can, and then avoiding or pulling targeted exemptions from some of these sectoral tariffs to the greatest degree possible. That's a little bit broad, but that's kind of the big major map stakes here. Now, senior U.S. officials have said that Europe was slow off the mark in the talks, but that those have been increasing. And there's nothing like a deadline in politics or in trade to kind of get people going towards talks. The latest deadline is August 1, and I stress the latest because deadlines, as you know, have sort of moved back from Liberation Day, which was in April, which feels a very, very long time away now. But the latest one is August. The White House is saying that it's not going to get extended again. We shall see how that goes. But that's the deadline that we're facing right now, and so talks are ongoing. There is a great effort to try and get something done before this comes, and we're even hearing that Europe might be able or might be willing to settle for a slightly unbalanced deal if it can get certainty and get some of these worst case scenarios avoided.
We're seeing these trade negotiations on all different fronts. What's the latest with Taiwan?
Well, Shery, the latest with Taiwan is that we're expecting another round of negotiations this week. It's a very complicated and consequential relationship, right? The U.S. is the number one principal security partner for Taiwan. It is its major, arms supplier. And you've got the geopolitical situation with China there that can't be understated as well. And so there's a lot of complications that go into this. The other thing to watch here is that the U.S. has said that it is really, I guess I might use the word covetous of some of the success that Taiwan has had with chips, has wanted to have more chip production domestically. And so there's some additional things that you would say are in play here, sort of atop the broadline negotiations. Now, there's been speculation about whether or not Taiwan has received a demand letter from the Americans. Taiwan has said that they haven't, in terms of just sort of flatly setting the baseline rate if things fail. So there's some idea that maybe these talks are going a little bit better. But the number of economies that we have seen sort of broadly actually come to a framework agreement or a top line or whatever you want to call those early agreements, it's very small. So a lot of economies that we have thought were maybe toward the front of the line or ones that would get across the line, many of them have not yet. And so Taiwan is very much in this position that I think a lot of other economies are, trying to figure out what is it that's going to get the United States to sign on to a deal, because there really have not been that many successful examples as yet, and the clock is ticking.
Derek Wellbank, Bloomberg senior editor, with the latest on ongoing trade negotiations on all different fronts, including, of course, we just mentioned Europe and the possibility that they could be willing to accept an unbalanced agreement that favors the U.S., according to sources speaking to Bloomberg. And you can see there the downside when it comes to European futures. We have already seen European stocks falling in the regular session. We have a mixed bag of earnings coming out of Europe at the moment. The euro also holding at that 116 level. We have more ahead on the Asia trade. This is Bloomberg.
Let's get the latest now from the corporate front. Citigroup says it's asking its incoming investment banking analysts to disclose whether they've already accepted job offers elsewhere. The bank says the move is meant to foster a fair and transparent environment as private equity firms increasingly recruit junior bankers early. Goldman Sachs and Morgan Stanley have recently introduced similar policies. Officials and cybersecurity researchers say that hackers have exploited a flaw in Microsoft's SharePoint software, breaching governments, businesses and organizations worldwide. Microsoft released a patch over the weekend, but warns more fixes are coming as attacks continue targeting SharePoint clients. The vulnerabilities were first identified in May by researchers at a Berlin cybersecurity conference. India's securities regulator says Jane Street can resume trading after depositing more than $560 million in alleged unlawful gains. The Securities and Exchange Board says the firm must cease any manipulative practices and comply with regulations. Jane Street denies wrongdoing, calling its trades basic index arbitrage, and says it's cooperating with the investigation. Shery.
Take a look at this stock that we're watching in Tokyo, SoftBank, which is, of course, a major stakeholder of ARM, chip designer there, that is also a big backer of Ambic Micro. And we're now hearing that this company is seeking to raise as much as $85 million from an initial public offering. So we have ARM rallying in the overnight session. And you can see SoftBank, its major stakeholder, now gaining more than 4% in Tokyo trading. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. Here's some of the headlines that we're tracking. The Trump administration says it's deploying more immigration agents to New York after a migrant allegedly shot a federal officer. Homeland Security Secretary Kristi Noem blames the city's sanctuary policies for releasing repeat offenders. New York officials say they follow state law and are targeting dangerous individuals in coordination with federal partners. Treasury Secretary Scott Bessent is calling for an exhaustive review of the Fed's non-monetary policy operations, including renovations to its headquarters in Washington. The Fed and Chair Jerome Powell have faced weeks of criticism from the Trump administration over the building renovations and for not cutting interest rates again. In a post on X, Bessent says that significant mission creep may be jeopardizing the independence of the central bank's core monetary policy mission. A new report says President Trump's recently passed tax and spending law will add $3.4 trillion to U.S. deficits over a decade. The latest estimate from the nonpartisan Congressional Budget Office also warns millions will lose health care coverage. The analysis doesn't factor dynamic effects like the bill's potential impact on growth or interest rates. Shery.
Paul, take a look at how Asian markets are trading at the moment. A little bit of a mixed picture with the Kospi down slightly, 0.2%. But you can see on the right side right there, the Nikkei is gaining ground at the moment, and it's being led by communication services, materials, some of those policy-sensitive sectors like utilities, construction as well. When it comes to defensives like healthcare, it's actually leading the losses. Perhaps a little bit of a sigh of relief, given that despite the fact that the Ishiba government lost the upper house elections and lost its majority there, he is vowing to stay on as leader, perhaps signaling some more stability in the government ahead, of course, of those trade negotiations ongoing with the United States. We're also keeping a watch on the offshore yuan. They both offshore and onshore advanced in the previous session. And this, of course, as we continue to watch the latest on a mega project that's being built by Beijing. This would be the world's largest hydropower project in Tibet. It's estimated to cost 4 times more than the Three Gorges Dam, providing an economic jolt to the construction sector. Let's bring in our China correspondent Minmin Lo in Hong Kong. Minmin, how significant is this project?
It is extremely significant for the Chinese Communist Party. This was something they planned for a long time. It was first announced in 2020 as part of the 14th five-year plan. It is something that is of a scale, of an epic scale, 3 times more than the Three Gorges project. It's expected to generate 70 gigawatt of electricity. Here's the big number, $167 billion. The amount it would cost to build it, it could take 10 years to complete, and it will generate an amount of electricity that is greater than the total power generation capacity in the country of Poland. That's one. So it's going to help work towards China's zero emission goals by 2060. The second thing it does is that economic jolt to the economy you mentioned earlier. We're talking about perhaps a 0.1% growth to GDP, according to Citigroup, in the first year of construction. We're also talking about the construction sector, iron ore, steel, benefiting from this. We already saw really sizable moves in the markets yesterday. We're talking about some of these companies moving up 10% or even more, and the iron ore commodities rallying as well. We also saw the bond futures, 30-year bond futures, selling off on Monday by the most since May. So a lot of the excitement from investors around this. But the question is whether it's worth the cost, because a Bloomberg analyst estimates that the cost of this is actually going to be 4 times more than wind power generation and 6 times more than solar, which means that this project will have to be run at consistently high capacity to generate good returns. And that is something that's increasingly uncertain in an era where climate change has caused a lot of fluctuation in water levels in important rivers in China. And I'm not even mentioning some of the ecological challenges that the entire area will face, a lot of opposition from countries like India and Bangladesh, because this river also flows downstream to those countries, potentially millions of people further downstream that could be affected, although the Chinese government says that there will not be any implications downstream, that they are taking all the measures to ensure protection to the environment.
Min Min, tell us a little bit more about that economic jolt that you mentioned, because it's quite timely, isn't it, considering some of the recent, wage data that we've had out of China?
Yes, so we have new data out of Goldman Sachs. This is Goldman Sachs' alternative data set that shows that wage growth in China is at its slowest pace outside the pandemic years. Bear in mind, this is an alternative data set. It shows that wage growth in the second quarter was 3.9%. That is 1% lower than the official numbers, although some analysts believe that the official numbers underestimate the wage growth issue, given that we did see a divergence, for example, in the employment sub-indexes of various PMI surveys versus the actual official unemployment data, which some analysts say could be because the official data still captures a lot of flexible or self-employment or other types of informal employment. But overall, the takeaway here is that you can see the official chart here shows that even the official numbers show the recent years' wage growth has still been far below pre-pandemic levels. That has implication on consumption recovery, right, and as well as a constraint on the Chinese government's effort to rein in that price competition among industry players, because that consolidation of industrial capacity could likely lead to job cuts, which is going to be another concern for the government given the already slack labor market that we're already seeing.
Bloomberg's China correspondent Min Lo there. And the other stories that we're following at the moment, 28 countries, including the UK, Japan, Australia, Canada, and many European nations, have issued a joint statement saying Israel's war in Gaza must end now. The nation's foreign ministers say the suffering of Gaza's civilians has reached new depths, condemning the recent killings of more than 800 Palestinians who were seeking aid. Israel's foreign ministry calls the criticism disconnected from reality. Vietnam is bracing for Cyclone Wifa, which is forecast to intensify to a strong tropical storm before making landfall on Tuesday. The government has warned of potential flooding, including in provinces where companies including Samsung and Honhai have factories. Wifa developed east of the Philippines last week and lashed Hong Kong on Sunday with gale force winds. Philippine President Ferdinand Marcos Jr. is set to meet President Trump on Tuesday at the White House. That follows visits to the Pentagon and State Department focused on tariffs and security cooperation. For more, Bloomberg's Andreo Calonzo joins us now from Manila. Andreo, so how much momentum does President Marcos have coming off these cabinet meetings with Trump officials?
Yeah, so Marcos has a pretty strong momentum going into the Trump meeting. So the meetings with the defense secretary and the state secretary has highlighted a strong defense alliance between the U.S. and the Philippines. So Defense Secretary Hegseth has even said that the alliance has never been stronger, and the Asia-Pacific region is a priority for the U.S. So what we have to see right now is if this assurances on the defense side will bear fruit into the into the economic side, especially with a higher 20% tariff rate looming over the Philippines.
Yeah, so what's top of the agenda for the meeting between Trump and Marcos, and what sort of outcomes might we expect?
So Marcos has said that his priority is reaching a trade deal, or at least pushing for a trade agreement with the Trump administration to lower the 20% tariff that's been threatened on the Philippines. Marcos has described this tariff rate as very severe, and has signaled that he wants to reach an agreement with Trump, especially since there's pressure on him to do so because our neighbors, Vietnam and Indonesia, has reached a similar agreement with the U.S. So, but for Trump, it's always expect the unexpected, right? There's always a possibility that he can torpedo the script that's being laid out by his top officials.
How much pressure is there domestically as well for President Marcos, given the recent setback in midterm elections?
An economic win will be very, very welcome for Marcos right now. Just a few months ago, his Senate slate underperformed in the midterm elections, and it showed that his main rival now, Vice President Sara Duterte, remains to be popular. So he will need an economic win right now, especially to push for his dream to make the Philippines an investment destination in the region. So if he won't be able to secure a lower tariff compared to our neighbors, that will deal a blow to his ambition to make us more attractive to investors.
All right, Bloomberg's Andrew Colonzo there. We have more ahead on the Asia trade. This is Bloomberg. Well, Australia's Parliament will sit today for the first time since the Labor government's landslide re-election victory in May. Prime Minister Anthony Albanese has also just returned from a 6-day China visit, while the Trump tariff deadline ticks closer. Well, here's a reminder of what Treasurer Jim Chalmers told us about the government's stance on US trade threats at the G20 meeting in South Africa.
We see these tariffs as self-defeating. We see them as an act of economic self-harm. We've made it really clear that we're not prepared to negotiate or diminish or weaken the PBS in order to get a deal. We've been clear about that from the beginning.
Well, let's get some more on the outlook for trade and foreign policy under the second Albanese government with Merriden Varrall, partner at the KPMG Australia Geopolitics Hub. Merriden, thanks so much for joining us today. Jim Chalmers also said that he views these US tariffs as an act of self-harm. There's certainly a fair bit of confusion in Australia about why Australia has tariffs, considering the trade surplus that Australia runs with the US. But never mind that. He also said what isn't up for reform, and that's the pharmaceutical benefits scheme, which promotes domestic production. I mean, is that something that Australia is going to have to talk about with the United States, and can it hold the line?
It's a great question, and it's something that Australia will. It seems like both sides of Australian politics right now are pretty protective and determined to defend our PBS and our MBS. And I imagine that with that environment that we're hearing and seeing in Australia at the moment, that Australia will go in and determined to protect that should those 200% tariffs come any closer to us.
Another thing that President Trump has been talking about is a desire to see Australia increase its defence budget to 3.5%. It's a policy one doesn't imagine would have tremendous domestic support. But Jim Chalmers says, well, look, the defence budget is going up, just not by that much. Is this another potential bargaining chip the government's going to have to deal with here?
This question of defence spending has been something that the Australian security community has been talking about for many years, and 2% of GDP has been the kind of goal for many years. But there is no doubt, and this is the context that needs to be taken into consideration, the context is changing. The broader geopolitical environment is the worst it's been in a long time, and that security context is getting worse. So from a national interest point of view, Australia has to ask itself, regardless of what the American administration wants us to do, what is best for us? And if we think that it is appropriate to increase our defence spending, then we need to make sure that we're having a national conversation with the Australian community to help them understand and explain why that is necessary, because the general population wants to see money spent on health and education, social services, not on defence, unless they can understand that there's a reason. So there's a really broader geopolitical context with this, as well as an Australian domestic politics context, and the Australian politicians and Parliament are going to have to negotiate that regardless of what the US administration wants from us.
And looming large in the geopolitical context, of course, is Australia's relationship with China. How would you assess the recent visit by the Prime Minister to Beijing?
That's also a really great question, because the feedback has been really positive. That he spent 6 days there rather than the usual 3, that he went to 3 cities, Chengdu as well as Shanghai and Beijing, all looks really positive. The engagement narrative, the idea that Australia is building resilience in the relationship with our greatest and most important trading partner, is really positive and really important, because in this broader, rapidly changing geopolitical landscape, we have to make sure that we are keeping our friendships and our relationships strong with everyone that we need to. It can't be a zero-sum game where we increase our relationship with one at the expense of another. Australia is a very exposed trading nation. We rely on good trading relationships, among other things, for our prosperity. So it's essential, it's pragmatic that we need to try and maintain a pragmatic relationship with our greatest trading partner.
How do multilateral frameworks like AUKUS, for example, fit into here?
So AUKUS is a small multilateral grouping. And what it means is that Australia, the UK and the US working together to try and improve the security of globally as well as for each of the actors within it. So in terms of that broader geopolitical context, it's a very difficult and sensitive issue to navigate, because we need to be concerned and thinking about our defence and security situation, but at the same time, we need to be building those relationships. So it's like a horse rider trying to ride 2 horses at the same time. Australia is the rider. We have 2 horses, the US, our security partner, and China, our trade partner. And we need to be able to try and navigate those 2 relationships at the same time. And it's becoming increasingly complicated because of that bigger geopolitical picture.
Yeah, at the moment there's questions over the reliability of the United States as a trade partner, but it wasn't that long ago there were the same, possibly worse questions about China when we consider the number of trade strikes that China levied against Australia. Do you feel like the lessons of the past have been learned when we look at all the smiles that came out of Anthony Albanese's trip to China last week?
Look, I certainly hope so. I hope that we're not going and considering that everything is roses and that everybody's buddies. We cannot return to the status quo ante. And if we think we can, then we are being naive and we are being complacent. The reality has changed. It will not be going back. And we have to navigate that reality. It's much more complex than it has been for decades. So we need to build a pragmatic relationship. We need to try and extricate politics from economics with our relationships. That's extremely difficult considering the way that trade and economics and investment are being weaponised. So the Albanese government, or whoever is in government in Australia, is going to have a very difficult time now and into the future of navigating that complexity, and we need to play it very carefully.
All All right, Merriden, Varrall, partner at KPMG Australia Geopolitics Hub. Thanks so much for joining us. And we'll have more on Australia ahead every Tuesday, 11:40 a.m. if you're watching in Sydney, and that is 8:40 a.m. in Hong Kong. Also, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify, or Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg.
Welcome back. Hayman Capital CIO Kyle Bass says he's wary of the outlook for major Asian currencies, including both the yen and the Hong Kong dollar. He told us why Japan's currency is particularly concerning.
Japanese sovereign debt to GDP is north of 260%. It's kind of the world's most interesting debt laboratory. And so when you get a scenario like you had with COVID, where you have to remember the whole world is priced in dollars. And so when the U.S. Fed and the U.S. administration decides to print and spend as much as we did, remember we put 40% more M2 into the system between 2020 and 2023. And what did we get? We got about a 40 or 50% inflation of almost everything. And I'll caveat that there are a few things that didn't move 40 or 50% higher in expense, but let's say dwellings and consumer goods and things that people have to buy every day or pay for rent did. So what happened in Japan is the yen went from roughly 100 to 160, and now it's sitting around, what, 145, 147. So when you think about the yen is just moving in the amount of purchasing power it has in dollars. It's really that simple. And so they're in a really bad situation from a debt perspective. They've got a population decline. They are a very important trading partner of the United States and one of the stalwarts of ours in Asia. So I think we're going to do all we can to trade and help the Japanese going forward. But I think they're in a precarious position, i.e. they either have to let their currency go or their bond market go, and they'll never let their bond market go. So I would beware of the yen into the future.
All right, well, we'll keep an eye on that one. I mentioned the Hong Kong dollar. You've bet against the Hong Kong dollar in the past, which of course is pegged to the U.S. currency, and it has experienced some swings because of President Trump's tariffs and the impact there. The HKMA intervening, spending a lot of money to support that currency peg. As Romain was saying, every so often people wonder whether it's time for the Hong Kong dollar to be repegged to a basket of currencies or repegged maybe to the Chinese currency. Are we at one of those times right now?
Yeah, I think, again, when you think about this peg, it's been around since 1983. Back then, the reason the peg was put into place is there was a massive run on the Hong Kong dollar. If you remember, there were rumors back in 1981-82 about the British handing Hong Kong back to the Chinese. And when those rumors got out, money started fleeing Hong Kong and Asia kind of writ large. And so the Hong Kong dollar depreciated 50% versus the dollar in a basket of world currencies. And we, the United States and the United States dollar, provides the stability to Hong Kong and therefore China and their currency regime. So when you think about that peg, it used to be that as Hong Kong's economy went, so did those of the United States and the West. Now Hong Kong's economy is more inextricably linked with China's, and there's a divergence in economic activity. China has had its worst financial crisis in maybe its modern day history in the last 2 or 3 years. Its 10-year bonds at 1.5%. Its overnight rates are roughly 1.5%. So China's having a really difficult economic period internally. And so those economies no longer move with the same synchronicity that was required. So look at Hong Kong's overnight rates today. The overnight rate is still close to zero. U.S. overnight rates are 4.3. One-year rates in Hong Kong are not around 1%. Ours are still around 4%. And if you can interchangeably own the HKD or USD, you'd be crazy not to convert it to USDs, right? You may earn 3 to 4% more. That's why you're seeing the weakness in the Hong Kong dollar. The question is, can Hong Kong afford to move its rates higher? Because the majority of Hong Kong mortgages are floating rate mortgages tied to short rates. So Hong Kong's in a really bad position right now, and also the geopolitical risks are there.
That's Hayman Capital CIO Kyle Bass there speaking with our colleague Scarlett Fu. Just want to leave you with a look today at how the Australian miners are performing. All the big names up by almost 3% at the moment. That would be due to the big bump we're seeing in iron ore prices right now. Iron ore 103.60 in Singapore, one of the most actively traded contracts at the moment. Probably a lot of the thanks for this goes to the new dam under construction in China. Going to be 3 times the size of the Three Gorges Dam at a cost of $167 billion. That's it from the Asia Trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.